What's going on, everybody? Welcome back to the Daily Stack Report. And today we're going to go over the market, kind of what's going on right now. Today is January 1st. Happy New Year, everybody. The futures market is back open and it's rocking. We're rocking, baby. We're at 71.80 right now for silver, gold sitting at 43.61, platinum sitting at 21.06, palladium at 16.74. So just kind of some current news right now. Gold ended 2025 on a strong note with an annual gain of about 65%, one of the highest yearly increases in decades. Even though prices have pulled back a little bit, we're still at record high compared to last year where we started. Gold's long term uptrend is intact despite short term selling pressure. Strong central bank demand and safe haven buying have supported these prices. Gold prices fell back from recent highs amid selling pressure and thin year end liquidity, with trading desks noting gold sitting at a 3 week low amid sharper moves in the last sessions of 2025. Why does this matter, guys? Year end position adjustments and profit taking can exaggerate moves, so it's totally normal. Thin markets are around holidays, often outweigh and you kind of see more outsized swings, so things can get a little bit more volatile. Looking ahead, outlook factors such as anticipated interest rate cuts, continued geopolitical uncertainty, and portfolio diversification strategies are cited by analysts as still supportive for gold into 2026, even after the recent pullback. So, just a couple takeaways: short term moves matter less than macro drivers, and gold's long term trend remains bullish, baby. We're bullish. Going into the silver market, silver has been one of the biggest outperformers in 2025 with an approximate 144% annual gain. Ooh, I know all my silver stackers out there love to hear that. 144% if you would have started at the beginning of last year to now. To all my other people who have been stacking for years and years, this is well overdue for us. But we did hit some late volatility later in the year, but it looks like we're holding steady. That $70 mark is looking nice and beautiful. Silver spiked to above $80 an ounce, then plunged back towards $70 an ounce within trading. Like I said, around the holiday times, it can get like that. Margin hikes did trigger sharp sell offs. The CME group raised margin requirements on precious metal futures, triggering forced selling and one of the sharpest drawdowns in recent memory. We don't need to go back to the 80s or early 2011 to witness that again. But short term volatility spikes, speculative positions got unwound. So we got some of the softer people out of there. Now we know we're dealing with people who are truly invested in it. They weren't just trying to hop on the rise real quick as everything was going up. And silver ETF prices did fall on the day, but we're headed back up. Futures opened up here a little bit ago, and so when we see this little spike right here in this candle, they opened up around 71, 70.94, dropped down to 70.53 on that 1 5. These are all 5 minute candles right here, and then hit up to 71.98. Now, we went up, went down, but it looks like we are forming a little bullish pendant right here. So it's going to be interesting to see if we can hold this. I believe if we do, then we may be able to get up to that $73 mark by the morning time. Let's see. Um, some analysts are warning that silver may face higher drawdown risk in 2026 compared to gold. That does kind of emphasize silver's volatility and sensitivity to shifts in investment flows and industrial demand. Silver can offer big gains, but also deeper corrections. So keep that in mind. What goes up sometimes comes down. We like a nice and steady uptrend. We don't want anything going crazy, but this is what we like. This is what we like. This nice and steady uptrend. So let's go ahead and check out some of these charts. Right now, Silver is at, like I said, that 71.70 mark. If we zoom out past month, like I said, we got this nice little formation coming here. We hit that high around 82.67, and then we saw these big drawbacks all the way down. We did bounce back, but we came down again. Um, Now, what I like to see is this little W right here. And also, if we look at these candles right here, the selling pressure was not held. We went down to 69.25, bounced back up, went down, bounced back up. And this one right here, we went down to 70.61 and then bounced all the way back up to around $72. Same thing here. Sold off, sell off was heavy, bounced back, sell off was heavy, still bounced back. Right now it does look like it's coming down a little bit, but that should change. Going over to gold, kind of see a lot of the same thing. Down here, these two candles, 42.84. Again, there's a lot of selling pressure down here, but we bounced back and came back up. Anytime it's really gotten beaten down, it hasn't stayed too much. Um, Even on some of these days, and then down here, we like to see how it didn't continue to go down. These candles weren't full. They did stop right there and come back up. And now gold did gap up a little bit, so that will typically indicate a gap up. It's nice because the price does go up, but all gaps do get filled. So at some point, I do predict gold is going to come back down to this 43. You need to come down to 43.33. It opened up at 43.37. I know you're saying, Frank, that's $4, man. That's $4, but let me tell you, gaps get filled. So it's going to come back down at some point and test that 43.33. If we can keep that candle green, we should have a nice little uptrend here. Platinum on that same mark. Oof, platinum got beat down pretty hard from all 25.84, sorry, all the way down to 1931. If you would have invested in platinum in 1931, you'd be sitting pretty right now. But if we look at the overall chart, I mean, this is just 1 month. In 1 month, we went from 1623 all the way to 24.84 or 25.84. Sorry, that's almost $100,000 gain. That's insane when considering platinum is only $2,100. That was nearly a 50% gain right there. So yeah, take it. I do like how we're kind of stabling out a little bit. We don't see these huge market swings, and it does look like if we can continue this right here, because like I said, we have these candles down here. That selling pressure um, never really held right here, and the selling pressure. While we do see, right here going down a little bit, we're not getting these full filled candles. So selling pressure isn't holding, which would indicate a bounce back right here, is which is what we saw. And now things are kind of stabling out. It was New Year's. Markets did open up today again, after being closed today or earlier today, and now we have today, which is going to be, or tonight, I should say, and then tomorrow, which is going to be Friday, to really see how the markets react to this. And after that, maybe we're back to normal trading, which is what we like. These light days really do increase that volatility. Kind of want to go over to a couple things that I saw um, over here on Reuters. Silver shines in 2025 global market. Spotlight as softs. Oil lagged a little bit. Silver outperforms major stocks indexes, currencies this year. Copper was at all-time high. Oil prices were down 15% in 2025 on economic woes, rising supplies. Cocoa is the biggest loser as improving supplies pressure prices. If you guys watch Mr. Beast, then he's probably not liking that too much. Well, I mean, cocoa's cheaper, so it's probably better for him. Let's see. Precious metals were the standout performers among commodities this year, with silver outperforming most major equity indexes and currencies, while gold hit record highs on economic and geopolitical risk. Industrial metals also made strong gains in 2025, with copper hitting all-time highs, silver and gold all hitting all-time highs. Same thing with platinum. The demand for metals is looking solid for both an industrial and retail perspective. The key fundamental drivers of central bank demand and investor positioning ahead of expected lower U.S. rates in 2026 remain intact. Silver gained 161% in 2025, breaking the $80 per ounce mark, as we mentioned earlier, for the first time, while gold climbed 66%. If we look at this chart right here, we can see the year on year change percentage, silver, platinum, palladium leading the top three, while cocoa, raw sugar, and coking coal were among the bottom. Now, something that's pretty interesting is that crude oil, was cheaper and is cheaper than an ounce of silver, which is something that's very rare and hasn't really happened in the most recent times. We did beat out the dollar index. Dollar fell 9.11%, while silver raised 164. Now we are seeing a lot of inflation going on right now in the market. So, and now we're wanting to cut interest rates even more, which is going to increase the amount of demand for silver. As it's going to get more valuable, our dollar is weakening a little bit. Eyes on OPEC and in the oil market. Oil benchmarks, Brent crude and U.S. West Texas Intermediate crude have fallen around 15% this year, with Brent heading for its longest ever stretch of annual losses, weighed down by rising supplies. Energy markets have recorded losses despite supply distributions arising from Ukraine's attacks on Russian energy infrastructure and U.S. measures targeting Venezuelan oil. Anytime we have economic downturn like that, precious metals are going to continue to rise, as it is more of a safe haven asset for people to hold. The Organization of Petroleum Exporting Countries and its allies have paused oil output increases for the first quarter of 2026 after releasing some 2.9 million barrels per day into the market since April of 2025. So that's pretty big, guys. That's pretty big. Record copper prices and Chinese demand. Copper on the London Metal Exchange, the LME, climbed to an all-time high of 12,960 this week, marking a near 44% gain in 2025. With a weaker US dollar, growing demand from artificial intelligence and renewable energy, and mine output distributions fueling the rally. The tin made similar gains thanks to supply distributions in Myanmar and tightening flows from Indonesia, while aluminum rose 17%, underpinned by China's cap on smelting capacity and growth in demand from energy transition technologies. We're not going to talk about that. Let's go into the bullion vaults. Gold and silver prices steadied from this festive season's sharp volatility as London trading ended for 2025 on Wednesday, with the two hard money metals ending this year's surge of new record highs with the sharpest annual gains in more than 4.5 decades. That's 45 years for anyone who needs to do that math. Following last week's Chinese Christmas chaos in precious metals trading and prices, London gold bullion fixed just beneath $4,300 per troy ounce at the city's 10:30 a.m. auction today, recording a total gain of 65% across 2025. We kind of went over that. This marks gold's sharpest price rise since the record jump of 133.4% in 1979, a surge which led to January 1980's big top in the gold at 850, a level it took almost 3 decades to top. Silver bullion in London, meantime, fixed just below 72 per troy ounce at midday today, rising 144% from last year's New Year's Eve. That marks silver's sharpest jump since the Hunt brothers back in 1979, when it leapt by 434.8% in US dollar terms. The 2025 silver price surge average topped $40 per troy ounce, rising 41.4% from last year, with the sharpest annual increase since 2011. We look at this chart right here, 2011, this was 1979, 1980 right here. When we had that huge jump, kind of mellowed back down. 2011 came back up again, and in 2025, only difference this time is going to be that we are in an actual deficit. Compared to these times, we weren't in deficits. This is when the Hunt brothers tried to corner the market. This was around the 08, 09 crash, as you can see right here. And so people, again, when there's economic downturn, people go to those safe haven assets, gold, silver being the main two, and we'll see those rises. But we weren't in a deficit then. Now we are. Now we're seeing that combination of more of the economic downturn, the dollar's weakening, and we're in a year after year deficit for silver. And China just banned exports of silver, unless there are a couple little caveats to that. But for the most part, it's going to be a strict ban on that. So it's going to be super interesting to see where we're going in 2026 with silver. Um, so yeah, guys, I'm super bullish on it. Super bullish on silver right now. I mean, with precious metals in general, but silver more specifically. Silver price. Here's what to watch for after the wild ride past $80. Silver's exceptional volatility in recent days has captured the zeitgeist with even the likes of Elon Musk drawing attention to the metal's ferocious rally and all-time highs. The metal rose to a record above $84 per troy ounce early Monday morning before promptly crashing close to $70 in thin post-holiday trading. Like I said, when there's thin trading, the volatility is higher. It's easier to move those prices up and down. It was one of silver's largest price reversals ever. Prices remain above more than 150% this year. Now the big question is, where does silver go from here? Here are the key charts. Chinese buying. Surging investor interest in China has been a key driver of silver prices in recent days. Speculators piled into the precious metal, mirroring a similar dynamic playing out in platinum. Elevated buying in the Shanghai Gold Exchange silver contracts in December has pushed premiums to a record high, dragging other international benchmarks along. We can look at this chart right here. We see these premiums right here. This is what people are paying um, on spot. So there's spot price, there's a futures price, and there's a premium you pay on spot. So right now people are paying upwards of 5 to reach right above $7, $10 an ounce above spot. So if silver spot price is, for instance, $75, you're going to be paying a premium above that. People are paying up to $80, $85 right now. The blistering rally provoked the country's only pure play silver fund to turn away new customers last week. After repeated risk warnings went unheeded, the fund's manager announced the unusual step Friday after multiple actions from tightening trading rules to cautionary advice about unsustainable gains failed to quell an eruption of interest fueled by social media. Let's check this out, guys. ETF inflows. Holdings in physical backed silver exchange traded funds have surged this year, rising by more than 150 million ounces. The total amount of metal held by the funds is still below a peak set during the Reddit driven retail investment surge in 2021. If you guys don't know about that, go look up GameStop in 2021 and you'll see that the GameStop short squeeze was one like no other. Look, let me show you guys. I think I got a GME right here somewhere. Yeah, GME right here. So GameStop's sitting about $20 right now. I know you're talking about, why are you talking about this? This is what happened back in 2021. GameStop went from 64 cents back in May of 2020 all the way up to, um, well, at the time, let me see. I know they've done some things with their stock, but I want to say went all the way up to around $400. Right now, this is going to show 120, but It went all the way up to 400, and that was the big GameStop short squeeze that was fueled by the Reddit rally. And as you see here, went straight up, and what happened? Went straight back down. Went straight up, then back down, up, down. All right, and then eventually went down. Difference with silver, though, compared to something like GameStop, is going to be the fact that look at that chart. Isn't that beautiful? That's what we love to see. So we love to see. Difference with GameStop versus this though is that this is a precious metal that there's only a certain amount of, right? Very finite supply. We're using it more and more of it every year. And we don't have to worry about fundamentals, right? We don't have to worry about, oh, if a CEO does this or they decide to go this way with the company or they don't hit their earnings amount that everyone thinks they're going to hit. All right, we don't have to worry about that. We're in a deficit and we're going to continue to be. Our dollar's weakening and exports are only getting tighter and tighter. Let's see. Technical indicators and margins. Silver prices jumped more than 25% in December alone. In December alone, we jumped more than 25%, on track for the biggest monthly increase since 2020. The speed of the gains meant some technical indicators were signaling that prices had run too far, too quickly. Like I said, can't go up too quick. We need a nice, steady inflow. The metals relative strength index, a gauge of buying and selling momentum, has stayed above 70 for most of the past few weeks. Reading higher than 70 usually indicates that too many investors bought silver in the short period. It's going to be this part right here. All right, we like to say this is that 70 line. And so it's kind of going down a little bit. Let's see. Some exchanges are moving to rein in risk amid heightened volatility. The margins for some COMEX silver futures contracts will be raised from Monday, according to a statement from the CME group. That's adding to headwinds since traders will need to put up more cash to keep their positions open. Some speculators won't want to do that and will be forced to shrink or close their trades instead. Options frenzy. One indication of speculative fever has been the level of buying for call options, both on the silver futures and related ETFs. Call options, which give the buyer the ability to buy a security at a predetermined price level, are typically seen as a cheap way to bet on the market's upside. For iShares Silver Trust SOV, the largest silver ETF, total call volume hit the highest since 2021 last week. The cost of buying calls on silver futures relative to the cost of buying equivalent puts, which protect against price declines, also jumped to historical highs in December. We can see that right here, guys. Up 10%. That's crazy. Let's go to borrowing cost. Borrowing cost, thanks to tariff-related trade, much of the world's available silver still remains in New York warehouses. Meanwhile, the market is awaiting the outcome of a U.S. Section 232 probe into critical minerals, which could lead to levies or other trade restrictions on the metal. The surge of metal into the US pushed the London market into a full blown squeeze in October, and borrowing costs there still remain well above their normal levels of close to zero. That helps set the stage for increased volatility and frequent price spikes. Look at that right there. Shot all the way up in October. Catching up with gold. Always trying to catch gold, baby. That's what we want is that gold. Precious metals generally have seen surge in investment demand this year, supported by a sagging US dollar, President Donald Trump's aggressive moves to remake global trade, and threats to the Federal Reserve's independence. Gold was the first to rally, benefiting additionally from strong buying by global central banks. Some market watchers hold as a rule of thumb that when gold makes a decisive move, silver will eventually move twice as far in the same direction. This year, of course, they would have been right. Many investors also track the ratio between the two commodities. After gold's initial surge in the early months of this year, the ratio stretched to above 100 to 1, signaling to some that it was time to buy the white metal, aka silver. And but in recent weeks, the ratio has rapidly shifted lower, and that's going to show you right here. Right, it moved all the way up. That was 2020. Earlier this year, it moved all the way past 100. Now we got down to we're back in the 50s, probably around high 50s right now. But guys, that's where we're going to be today in the gold market. Let's go back to where we at currently. We'll do our 1 day. Like I said, I like tracking these 5 minute candles. Um, and look, since we've been talking, this is where we were right here. And so it's nice to see that, we do have that nice little bounce back. And we are coming back up. And so that is, oh, that's the 1 minute. There we go. I want the 5 minute. There we go. So this is where we opened up right here today. Like I said, we had that initial push up, came back down, and formed this nice little pattern. And then again, we were kind of testing it again, testing that 71, and now we're kind of coming back up. It looks like these past 5 minute candles, we've had weak candles on the upside to it. So we may be coming back down a little bit to about right here. Let's test this area out. And then if we are successful right here, we're probably going to go back up. So it's nice to see that even though we did have this big push, zoom back out a little bit more. There we go. I don't know why it took me there. There we go. We had 80, 82, gapped up right there. So we knew we were going to come back down. Came all the way down to that 70. Over here it hit 69. But if you look at this line right here, we're holding really strong on that $70 mark. It's not wanting to budge down. Um, Yeah, we're not wanting to budge down right now, right? We hit the $70 mark, boom, came down, hit a double bottom right there. And then while this wasn't 72, or 70, this was like 70, 72. But again, we hit that bottom again and we rose all the way back up to 77. Now we are coming back down again, and which is okay because we hit this $70 mark again, tested, went back up, hit 70, 58, tested, stayed steady, went back up. Then we came back down to test $69, went past that, and it shot right back up. And so this is a good sign that this $70 right here is going to be a nice place to call home as a bottom. I know some people were worried that, myself included, that we would be going back into the mid 60s, which I still can see that as a possibility. But let's hope not. Let's hope we stay in these 70s, bottom out right here around 70, and then we continue this nice little uptrend. Like I said, it's nice to have these weeks and months where we just shoot straight up, but it is also really nice to have these nice steady inflows. We hit a bottom right here, a double bottom, almost triple bottom right here. And so that is going to be nice to see where it plays out. Again, we have tomorrow's trading, or I guess, yeah, tomorrow's trading, which is going to be January 2nd. So it'd be nice to see where we end that day. And then we have a full week of trading after that. Going back to, we're going to check out, oh, that's Kitco. Kitco has it at, let's see. Kiko has silver at 72.86. We got 72.25 right here. Let's see what, now this is something that I've been following as well, are these premiums. And so right now, look at this. They even have the warning up there. Historic silver price action will cause processing and shipping delays. We appreciate your patience. It doesn't even say how long. It just says, hey, you're gonna have some, you're gonna have some delays. So be ready. Now let's go to silver rounds. And let's see what we're looking at. 1 ounce silver rounds. So spot is 73.68. Look at this. I understand this product is on delay and my entire order containing this product will have the expected ship date, not arrival, ship of January 23rd. That's more than 20 days on a basic round. A basic round. That's not on ASC, a Silver Eagle. That's just on a basic round. You gotta check that box. Right now, They have a check wire 80 and spot price is 73.65. So it's almost a $7. No, it's a $6 over $6 premium. That is $6, yeah. It's a $6 premium if you're paying with check or wire, that you're having to put on this just to purchase a single ounce. So even though this over here is showing us 72 futures, spot is 73, premiums are so high right now, you're paying $80 for 1 ounce of silver. That's insane. So we're over Silver Eagles. This is going to be, so we have the 2026 and then we have a random year. With this one, we're looking at January 9th. Okay, it's a little bit better. It's a little bit better. 84.61. So you're paying about $11 over spot for something like this. We're just gonna go back out to 1 ounce. Let's check out 1 ounce silver bars. Ooh, I like this dragon right here. This dragon's nice. So for this one, it does look like it's gonna be regular, but again, 81.63. You're paying $8 over spot for that one. All that is super nice. I really do like that dragon design. I may have to pick myself. I may have to get one of those myself. Let's see where we at for 2 ounce silver rounds. Scottsdale Mint, Silver Eagle. Okay, okay, looking good, looking good. So maybe it's just some of these silver rounds, kind of depending on which one you're looking at. Let's see if they have. Oh, look at that one. That one's pretty cool. That one's nice. Yeah, so it's going to be looking, if you're wanting a more popular round, does look like you're gonna have to wait a little bit for it. That's just crazy. January 2020 or January 23rd. Yeah, so even for like this one, the Rifleman, product availability is January 23rd as well. January 23rd. So it's going to depend on which ones you're looking at, but I would definitely recommend going to your LCS. Maybe calling ahead, see what their pricing is like right now. So I do know some are getting low. I've been to a couple myself where they're in more of a sell mode. They haven't really been buying too much. But then on the other hand, I've been to some and they're buying more than they're selling. And how they do that, couldn't tell you. They have these relationships with the refineries. I think some have better relationships than others, and that's why you're seeing some that aren't. I think it's really starting to show. It's really starting to show who has the better relationships with their refineries and who doesn't. Because some of these places, I go in and they'll buy, sell, a couple dollars back a spot, a couple of dollars over spot, no problem. But some of these places, you talk to them, and if spot's 73, they're trying to buy it for $55 or $60. I went to one about a week ago whenever silver was at $78. He was purchasing silver rounds, 1 ounce rounds at $60. I actually got a pretty good deal. I traded in five American Silver Eagles, and I got 15. Yes, right, 15 Morgan dollars. So they were a little bit older, but I do it for more of the ounce. I like to look at the deals. Let's see what deals they got here. We're gonna do deals on top silvers. Yeah, I search for the deals. I do a lot of eBay lives and a lot of whatnots. I find the trusted spots. So find your trusted eBay live people. People who have the LCS and they do it on the side for eBay live and whatnot. Purchase for them from them because you can usually get a pretty good deal. And if you're doing it for the ounce amount, the physical ounce compared to just like what kind of silver you have, then this is a perfect opportunity. So you'll go in and look for, a nice, either buffaloes are usually in really high demand, or silver eagles, something like that. That's typically what I go for. That's what I'm the most familiar with. But I'll try to find those on good deals, or if you can find yourself a silver maple leaf, that 5 ounce one is nice. I gotta get one of those. But if you can find yourself a maple leaf, something super recognizable and that carry that premium, you'll go in and try to get it for below spot or right at spot. And what you do is you obviously have to call, and sometimes you have to go and build these relationships with these local coin shops. But you can go in and trade or sell, then buy, but trade, let's just say a 1 ounce maple leaf. It's 1 ounce of silver, no more, no less. And you can usually easily get two Morgan or Peace dollars, which each have about 0.77 troy ounces in them. So two of them, you're looking at about 1.5 ounces. And so you can typically net zero point 0.5 ounces, troy ounces off of a trade if you're looking at, just like a 1 ounce premium or a 1 ounce coin. So if you're doing it for the silver content, that's going to be one of your best bets. And the reason they usually do that is because these popular 1 ounce rounds, like the Buffalo or a Maple or an ASE, is they can send these to the refiners and get them, boom, get them melted, easy money. They're not having to, pay or sell it back of spot too much. But what's going on right now is, since a lot of these people are backed up, and this isn't going to go on forever, right? But right now, since a lot of these refineries are backed up, it's harder for them to send in anything that's not 0.999 fine silver. And so they're willing to, one, they're buying it for way cheaper. So be careful on that. Again, you're doing this for the ounces and you're doing this for the long term. This isn't a short term trade, but you're taking advantage of where the market is today. And so for them to send in anything that's less than 0.999, they're not getting the full value of it. So they're just holding that inventory. Granted, they're buying it cheaper, but they're having to hold that inventory for people to come in and purchase. So you bring in something that's recognizable, hold its value, and usually has a premium above spot, then once you actually, they can send that in pretty easily. And so they'll make a little money. You'll get a couple more ounces, or zero point 0.5, half an ounce more. You do that on a regular basis, and you can typically net anywhere from zero point 0.5 to 0.75 ounces on a single maple leaf or ASE or generic round. The one that I'm talking about, I did ASE, and then I also traded in a couple buffaloes. So for three buffaloes, I got it was a 3 for 6, so three buffaloes, six Morgan. Well, they were actually piece, but I got $6 dollars for that, and so I netted about 1.5 ounces. So walked in with 3 ounces, came out with 4.5 ounces, and like I said, I'm holding for the long term. I'm not short term, and so I do believe long term things are going to balance back out. Refineries are going to get caught up, and those deals that we're getting right now, those anything from a Morgan to a Peace dollar, that price that we're going to be able to sell it at is going to raise. And then of course, if something does happen, they are a U.S. minted coin. They do hold their value in that sense too. But that's just my little tip and trick for the day. Before I head out, guys, let's see where we're at again. As of January 1st, 9:08 p.m. Central Time. Silver is sitting at 72.35 future. Gold is sitting at 43.37. Oh, look at that right there. That's what we like. That's what we like right there. So gold's getting a little price increase right now. Gold's getting a little price increase. Let's see if silver can match it. We're gonna go ahead and test. Looks like we're gonna give it another test at that around that 72.42 mark right here. We did have a couple weak candles right here, but if we can finish strong right here, test 72.42, test 72.55, 72.50, and we can, stay above that, then it does look like we're going to come back. We're going to go ahead and run up and test that 73.34. From there, I'm looking to test this 75. See, we have a top, we have a bottom, we have a top right here. So around 75.62. We passed that. It does look like this is where that head and shoulders that I was referring to in another video had formed. You got the shoulder right here, you got the head, you got the other shoulder. And guess what, guys? We fell off. We went down, right? Your boy was right. Again, I was short term. I'm not saying, that was the end of the world. Some people took it like that, but that's not what I meant. It was just a short term analysis, and we came back down. And so if we can continue, we've hit a couple bottoms here, bottom there, bottom there, bottom there, and we've bounced back every time. So if we can continue to hit those marks like I'm talking about, hopefully by early next week we can be testing that 75. Then we'll be able to test that 76.50, and if we can continue that, then it's off to the races at 78. Um, yeah, it looks like we'll be at 78. Then we'll be around that 80. This is that gap right here. So if we can, fill that gap, we already filled it on the downside. But if we can fill it again on the upside and sustain this, this was, within a couple hours right here, and we shifted down and we stayed down. But if you look at it right here, we have a nice little first W. So you have the W pattern, right? And so you want that first loop right here. We came back up about midway. Then we came back down. Again, we tested these bottoms, bottomed out, tested again. Um, and I don't want to call this an inverted head and shoulders. No, it's definitely not. But you have here, and you have this. And so if this can come back to here, and then we'll make another one of these right here, right? So you'll see it come back up to here-ish, maybe around that time. Let me zoom out. And then we'll come back down, and then we'll see if we can test this right here, that 75, 73. And if we can, should be easy sailing up to 77. And then if we can test that at 80. So again, guys, appreciate you staying and watching the full video. Make sure you subscribe to the Daily Stack, and have a great day. Continue stacking.